to be continued. We are defining how these figures were defined and captured under this transaction file. Now, as a review, transactions are inputted in a debit-credit fashion. So each debit or credit entry has one row. One debit, one credit. If there are two debits or two credits, then that's the number of rows that you have. Now, for instance, let's say a sales transaction has how many entries? You see, debit AR, credit VAT, credit sales, and okay, so you have 3 entries for a particular sales transaction. You have debit AR, credit VAT, debit AR, credit VAT, credit output, credit sales, credit output tax. So 2 credit transactions and 1 debit transaction. Now, that is defined by a particular account because each transaction has an account. Now, how do we capture that in the column so that you will have this amount can be transferred, the debit amount of AR, let's say, can be transferred to this column. How do you do that? Because this column is defined as such. So let's define that column. Let's look for that AR definition. There. You see? That's your AR definition. But that's the sum. But this is the actual how you capture it in the column. You said that if the account number is 110, you get the balance of the debits and credits. Now, as you know, in the debit-credit column, the AR is debit, and the zero in the credit column is 0. So when you capture that, then the balance should be, which is a formula, okay, should be 0. So let's look for that account. Let's say in our sales transaction, let's look for that account. Okay, here. So you have, this is the transaction we were talking about a while ago, and the AR account, you see, the debit and credit is here, and this is the balance. The balance captures your debit and credit transaction. Now, for a particular account, like let's say AR, then that is captured on a specific field. Like for example, this 216 and so on and so forth will give you a sum. Okay. Okay. So that particular account is sum, and it's what you get here, what you get in your transaction. But we are talking about 1203 that comes from so communication again is defined as, okay, so IADE. So we look for that column. Okay, and that column is 1203. The figure is 1203. You look for that column here, right? Because that is the basis of your file. Okay. Let's review that. What we have is, you're looking in the communication expense account. The field that we are looking for is IADE. IADE. So let's look for that. IADE. There you go, IADE. And the figure you're looking for is 1203, which is really the sum of all the transactions that went into that particular account. So you command the sum total and it goes to this particular field. This is the second part of that video presentation. So you are watching an application for a construction industry, because this is where variance reporting is most probably needed. Meantime, they can also use it for the other industry, like maybe a computer software industry. You would want to make comparative analysis, whatever comparative analysis where there is a variance, there is expense budget. It doesn't matter. You're in a computer industry, you monitor your expense budget. You're in hospital and healthcare, you monitor your budget. You're in information technology service, you're in college or university, higher education application, non-profit organization, all the more you monitor your budget, because as you know, budgets for non-profit organization comes from grants. So you would want to know variance reporting. You would want to learn it. And you can do it in Access. We have proven that. You can check out our website, and you can check out the YouTube channel for all those videos that you need. In the meantime, you can check on us, and you can look for us on our website. And thank you for watching. This is iSYSTEM and YouTube, and we have brought to you variance reporting in the construction industry.